We're jumping straight into Redcat today. Everyone is watching the price action, but the real story is the massive legislative tailwinds in U.S. Army contracts pushing their production into overdrive.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we really get going here, just a quick reminder for you all to subscribe and hit the like button, so you never miss out on these breakdowns.
Yeah, definitely do that because, man, the immediate market reality we're looking at today it's just wild.
It really is. I mean, if you're looking at the chart right now with us, you are seeing a stock that is up, what, over 60% in just the first few months of 2026?
Yeah, over 60%.
And that massive run was recently punctuated by a 10.2% pop.
Yeah.
Like in a single trading session.
Which is huge.
Right. And we are also tracking really heavy institutional activity, what we call the whales moving in, plus some highly unusual options flow over in the industrial sector.
Oh, for sure. Sophisticated money is very clearly positioning itself here.
Okay, let's unpack this. A 60% run in a few months is huge. Are we just looking at a temporary wartime defense bump, or are we witnessing the birth of a dominant homegrown defense manufacturing giant?
That is, well, that's the core tension driving the market's fascination right now. Because stock momentum, it requires fundamental fuel, right?
Right. Otherwise, it just burns out.
Exactly. A chart can only show you the footprints of where the money has gone. The fundamentals tell you if there is actually a solid road ahead.
Yeah.
So to figure out if this is sustainable, we really have to look at how rapidly their revenue is exploding. And probably more importantly, the regulatory moats they're building around that revenue.
Well, let's get straight into those staggering numbers then, because they really provide the foundation for everything else we're going to talk about today.
Let's do it.
So we're looking at the preliminary unaudited Q4 2025 revenue. It's currently sitting between $24 million and $26.5 million. Now, in the grand scheme of the defense sector, maybe $25 million doesn't sound like a world-dominating figure.
Sure, compared to the massive prime.
Exactly. But context is everything here. That represents an astronomical 1,842% growth year over year.
It's just a staggering jump. And the broader trajectory is honestly just as compelling.
Oh, absolutely.
If you pull back and look at the full year 2025 expectations, they are projecting revenue to land somewhere between $38 million and $41 million.
Wow.
Yeah, which is a 153% jump from 2024. So this isn't just like incremental growth. This is a company undergoing a complete structural transformation.
Here's where it gets really interesting. 1,842% growth sounds insane, like a local bakery suddenly being asked to supply every supermarket in the country overnight. Relying on government contracts is notoriously slow. Do they actually have the cash to keep the lights on while waiting for the Pentagon to cut the checks?
They do, actually. That's where their balance sheet becomes their biggest defense mechanism. They are currently sitting on over $140 million in cash.
$140 million. Okay, that is a massive cushion for a company of this size.
It really is. It gives them immense stability and the free cash flow to scale production without constantly tapping the brakes.
But I want to pause here for a second and go back to the demand side. What is the specific catalyst driving this sudden massive explosion? Because they didn't just stumble into this.
No. The primary match that lit this power keg was a $35 million U.S. Army deal.
Right.
That specific contract, it enabled an initial 647% revenue surge even before these Q4 numbers we just talked about.
So they are successfully executing a massive operational pivot.
Exactly. They are transitioning out of niche boutique drone development, and they're stepping right onto the highly demanding stage of mass defense manufacturing. They're building units for active military deployment now.
Which brings up a fascinating dynamic. I mean, if you build a fantastic drone, what is stopping a massive established foreign competitor from just swooping in, like undercutting you on price and stealing that Army contract out from under you next year?
Well, that's the...
Because we all know the history here, right? For the better part of a decade, if you wanted a highly capable, affordable drone, you bought it from Shenzhen. Chinese manufacturers absolutely dominated the global supply chain.
Yeah, companies like DJI were everywhere. But that history is exactly why the regulatory environment has completely flipped.
The legislative tailwinds.
Precisely. It became glaringly obvious to the Pentagon that having active U.S. military units relying on hardware that could, potentially be pinging servers in Beijing.
Yeah, that's a catastrophic security risk.
A total nightmare. And this is where the story shifts from just being about Redcat having a good product to them possessing an unbreakable structural advantage. The government isn't just casually encouraging the military to buy American anymore. It is effectively becoming the law.
Yeah, let me break down exactly how that law works for you listening.
Yeah.
Because this is the regulatory force field protecting their revenue. We really need to look at the fiscal year 2025 National Defense Authorization Act, the NDAA.
Specifically, Section 1709.
Right, Section 1709. So for those of you tracking the legislative side, this section effectively restricts the Department of Defense from using foreign-made drone components, specifically targeting Chinese hardware.
It just creates this massive vacuum.
Exactly. The military still desperately needs small drones, but suddenly their primary historical suppliers are legally off limits.
And stepping into that vacuum requires a lot more than just showing up with an American flag sticker on your product.
Oh, for sure.
You mentioned the term Blue UAS certification earlier when we were looking at the notes.
Yeah.
For anyone listening, that can sound like generic corporate jargon, but it is absolutely critical to understand. Blue UAS is a strict Department of Defense-approved clearinghouse list.
It's the gold standard.
Right. To get on that list, your hardware and your software have to undergo brutal cybersecurity audits, supply chain verifications, all of it. If you don't have Blue UAS certification, the military legally cannot buy your drone for secure operations.
And Redcat has secured that certification for their primary systems.
They have.
And they aren't just building like one generic drone to check a box either. They're building a highly integrated ecosystem.
Yeah, across multiple domains.
Right. Through their subsidiaries, Teal Drones and FlightWave, they have the Black Widow small unmanned aircraft systems, the SUAS.
Which are specifically built for the Army's short-range reconnaissance program.
Exactly. But they're also pushing into a completely different domain, the water, with their Blue Ops maritime vessels.
Which honestly is a brilliant strategic move for the long term. They are offering multi-domain capabilities, air, land, and sea.
Why does that matter so much to the Pentagon, though?
Well, think about the friction of modern combat, right? The military does not want a fragmented supply chain where, say, the aerial drones use one proprietary software interface and the maritime surface vessels use a completely different one.
Oh, yeah, that sounds like a headache.
It is. In a highly jammed electronic warfare environment, cross-domain communication is incredibly difficult.
Right, because water absorbs radio waves differently than air does. And encrypted data links need to talk to each other seamlessly.
Exactly.
Plus, I mean, from a pure human perspective, if you can give an 18-year-old soldier one unified software interface to control both the drone in the sky and the vessel on the water, you drastically reduce training time.
Precisely. The Pentagon's drone dominance program is demanding fully integrated solutions. By offering an ecosystem of U.S.-made secure hardware across multiple domains, Redcat makes itself a highly attractive partner.
They get locked in.
Yeah, the switching costs for the military to move to a competitor later become incredibly high once all their personnel are trained on this specific unified system.
But, okay, let me push back on this narrative a bit. We've established they have the demand, they have the legal protection, and they have the ecosystem.
Right.
And we mentioned that massive cash pile. But scaling physical hardware is a graveyard for tech companies.
Oh, absolutely.
Are they trying to run before they can walk with all these different air and sea drones?
Yeah.
Like having a giant pile of cash doesn't guarantee you know how to build a factory.
No, it doesn't. Execution is a totally different beast. You can burn through $100 million incredibly fast if your assembly line is plagued by inefficiencies.
Right. And despite that fortress balance sheet, despite the 1,800% growth, the stock still saw a recent 7.88% pullback.
I completely agree, and that is the exact risk we need to highlight for the listeners. So let's shift gears and look at the bear case.
Let's do it. We have to address the reality of scaling.
Yeah, it's one thing to hand-build 100 perfect prototype drones for a military testing program in a lab somewhere.
Right. Artisan drones.
Exactly. But it is an entirely different universe to roll thousands of them off an assembly line with absolute zero defect tolerance. Because these are going to active combat units.
You're hitting on the most critical vulnerability. So what does this all mean? They have the cash, but scaling physical hardware is a graveyard for tech companies. Are they trying to run before they can walk with all these different air and sea drones?
Well, the lowdown on the risk profile here is that, yes, revenue is surging at a historic rate, but the company is still currently operating at a loss.
Wait, If you are growing top-line revenue at 1,842% and you are still losing money, that tells me the cost of scaling is astronomical.
It is. I mean, in the early stages of transitioning to mass manufacturing, you are spending heavily on CapEx, capital expenditures.
Building the actual factories?
Building out the physical infrastructure, hiring specialized personnel, securing rare earth materials for motors, and you have to establish secondary suppliers so a single bottleneck doesn't shut down your whole line.
Right. Expanding their profit margins relies entirely on operational efficiencies that simply haven't been fully realized yet.
Exactly. We hear the term FRIP a lot in defense procurement, full-rate production.
FRAT.
Basically, until they reach that stage where the assembly line is humming perfectly without constant retooling, those profit margins are going to bleed.
That is exactly the friction point.
Yeah.
Forward guidance implies that these margins will improve as they hit FRIP, but until they actually prove they can manufacture these complex systems profitably at scale, the losses will persist.
Right. And that recent 7.88% dip was likely a normal market-driven pullback within a larger bullish structure, but it serves as a stark reminder.
A reality check.
Yeah. This company carries a high valuation based on future expectations. If they fail to deliver on these massive Army contracts on time and on budget, the market will punish them severely.
We also have to zoom out here and talk about the macro environment, because there is a heavy geopolitical dependency at play.
Oh, heavily.
Let's look at the broader landscape objectively for a second. A significant portion of the current demand driving the defense sector is fueled by severe geopolitical tensions. We're seeing the ongoing conflict with Iran, broader instability across the Middle East, and we are hearing continuous political rhetoric from various leaders regarding the need for, unlimited munitions and rapid defense buildups.
And this introduces a very real macro risk regarding demand sustainability. We are clearly in an accelerated cycle of defense procurement right now.
Right.
But what happens if diplomatic efforts actually succeed? If de-escalation occurs and geopolitical tensions ease significantly over the next 12 months, the immediate panic buying of defense technology could slow down.
And just to be completely clear, for you listening, we are not taking any ideological stance on the politics, the rhetoric, or the conflicts themselves.
No, not at all.
We are strictly analyzing this impartially as a market catalyst. The brutal market reality is that conflict drives defense spending. If the conflict narrative softens globally, you have to ask, does the revenue narrative for a company like Redcat soften with it?
I'd argue that while it's a valid concern, there is a strong counterweight to that risk.
Yeah.
The U.S. military is currently undergoing a systemic doctrinal shift.
Modernization.
Yeah, they are modernizing their sources and integrating unmanned systems regardless of immediate localized conflicts. The transition to drone warfare isn't just a temporary wartime measure anymore.
It's the new standard.
It is a permanent evolution of how the military operates, much like the shift from cavalry to mechanized armor a century ago.
That's a great analogy.
However, the risk of a short-term demand deceleration is absolutely a factor that investors must weigh against that long-term doctrinal shift.
So we have this incredible tension. On one side, you have explosive historic revenue growth, a massive regulatory moat actively boxing out Chinese competitors,
Right.
and $140 million in the bank.
Yeah.
But on the other side, you have the very real threat of manufacturing bottlenecks, ongoing operating losses, and the unpredictable nature of global geopolitics.
It's a lot to weigh.
It is. Having weighed both sides of this argument, how do we know which side is actually winning? What should you, as the listener, be watching for over the next few months to see how this plays out?
The next 30 to 90 days are absolutely critical, and there are very specific triggers you need to monitor.
Okay, what's first?
The biggest immediate catalyst is going to be their Q1 2026 earnings report.
Because that is when they will release their fully audited 2025 results.
Exactly. We have the preliminary unaudited numbers showing that massive 1,800% growth, but the market is going to scrutinize the audited release heavily.
Yeah, they want the official stamp on it.
The expectation is set for full year 2025 revenue to land between $38 million and $41 million. The first question is simply, do they officially beat that expectation?
But the more important metric will be their forward guidance for the rest of 2026, right?
Yeah.
You want to see if those operational efficiencies we talked about are actually starting to show up on the bottom line. Are the margins improving as they scale?
Precisely. That will be the ultimate proof of their ability to execute. Beyond the hard numbers, you also need to monitor their speculative pipeline.
Like what?
Well, back on February 27th, they held an Innovation Day. You want to look for any unconfirmed but highly anticipated follow-ups from that event.
If we look at their roadmap, they aren't just looking at the sky anymore. They are moving to the water with these maritime vessels.
Yeah.
Is this multi-domain approach what the Pentagon is demanding to secure these massive contracts moving forward?
It absolutely is. Investors should be watching for any news of live demonstrations of their Blue Ops maritime vessels to military brass. Seeing is believing for the Pentagon.
Oh, for sure.
If they can successfully demonstrate that their surface vessels can communicate securely with their aerial drones in a live, simulated combat environment, that solidifies their multi-domain strategy.
You also want to keep an eye out for any news regarding follow-on awards from the Pentagon's drone dominance program. The initial $35 million Army deal was the catalyst. But if they start securing secondary and tertiary contracts across different branches of the military, it proves that their integrated ecosystem is becoming deeply entrenched in the procurement process.
And, it is worth noting that the broader analyst sentiment seems to reflect confidence that they can achieve this.
Yeah, they've been pretty bullish.
Recently, analysts have raised their price targets on the stock to $20, which reflects a strong belief in the company's multi-domain expansion and the protective tailwinds of the NDAA.
Yeah.
When you combine that with the top-tier sentiment scores we are seeing in the financial news flow, it paints a picture of a company that has successfully captured the market's imagination.
But as we've established today, imagination and high valuations must eventually be backed up by cold, hard execution on the factory floor.
Yes.
They have the runway. Now they have to prove they can scale the machine without it breaking apart. So to bring this all together and give you the lowdown on today's analysis,
Yeah, let's sum it up.
this is fundamentally a story of a company leveraging massive legislative tailwinds, specifically the foreign hardware bans in Section 1709 of the NDAA, combined with a fortress-like cash reserve to position itself as a centerpiece of U.S. defense manufacturing.
Right.
They are navigating the treacherous waters of scaling physical production, shifting from a niche developer to a mass producer for active military units. The top-line revenue is growing at a staggering pace, but they are in a race against time to prove they could achieve operational efficiency and profitability before the market loses its patience.
It is a delicate and fascinating balancing act. And as you digest all of the data we've walked through today, I want to leave you with a final provocative thought to mull over, something that extends far beyond just the U.S. borders.
Okay, let's hear it.
If American hardware is being strictly protected by U.S. legislation right now, what happens when this company's battle-tested technology becomes the new required standard for allied nations globally? Are we looking at the infancy of the next global defense prime?
Oh, wow. Because allied nations across the globe, particularly within NATO, frequently adopt U.S. military standards to ensure interoperability during joint operations.
Exactly. If the United States completely phases out foreign drone components due to security risks, its allies will inevitably face immense pressure to do the exact same thing to maintain secure, integrated communication networks.
That is a massive paradigm shift. An allied platoon using a Chinese-made drone could compromise a joint U.S. operation. So the total addressable market isn't just the Pentagon, it's potentially every allied military force on the planet.
That completely changes how you view their valuation and their long-term ceiling.
Well, that is exactly why we look beyond the daily chart and dig into the actual mechanics driving these massive market moves. Keep your eyes on those upcoming audited earnings and how well they execute that multi-domain rollout. Thanks for joining us. Remember to hit that subscribe button, and we'll see you next time.